I'm about to begin my meeting with Jay Pestrichelli of Yieldmax Funds. So we're here at Jay Pestrichelli. Jay, just take a moment to introduce yourself to my audience.
Sure, absolutely. I'm Jay Pestrichelli, CEO of Zega Financial, but what really matters is we're the sub-advisor on the Yieldmax and the Defiance funds. Basically, that means we get hired by the advisor to execute the strategy and do the trading on the funds. We specialize in option trading. There you go. There's the the high end for me.
So as the sub-advisor, are you saying that you do the actual trades every day?
Yeah, me and my team, mostly my team, right? But we execute the strategy. We do the trades within the portfolios. When you guys don't like a strike or you love a strike where we sold a call or we bought a long call or bought a put, that's my team executing those trades.
Okay, so it's actual people. It's not an algorithm that's kind of set.
Nope, the real people. Real
Okay.
people. Look, there's rules. Don't get
Right.
me wrong, like all trading, but no, there's real people clicking the buttons.
All right. So the advisor, who's the advisor makes the plan, like puts together the strategy, and then so we know the sub-advisors and you guys actually do the trading and push the buttons. So who makes the strategy? Who's the advisor above the sub-advisor?
Yeah, so the advisor is and all of these funds that we're talking about, it's the name of the company is Tidal, Tidal, like Tidal Wave. So there's the Tidal Trust. They are the investment advisor for the funds, and they do things like hire the accountants, hire the auditors, hire the administrators, hire the sub-advisor, right? Hire distribution. They get the lawyers together. So they're kind of they bring it all together and help execute the strategy. Now, when it comes to the idea behind the strategy, it's not always 100% them. They obviously have to have buy-in for the strategy. But with Yieldmax, for example, like you have on the screen, that was kind of a confluence of multiple parties, Zega being one of them, Tidal being another. Two other parties all kind of got together and said, hey, we think we could do this weekly covered call thing using options to generate premium. And then together, that group then devises the strategy, and then Tidal takes it from there, writes prospectuses, handles the SEC, all that kind of stuff.
Yeah. Okay. So now we have a clear picture because, it was a question as to who was doing the trading and the actual trades, and was it a template? Okay, and obviously you answered that. What we wanted to know is, was it a template that was created for the first few funds and then just slapped on everything? Is that the case?
I mean, the concept, yes, of course, right? Once we saw how Tesla and OARC and Apple and NVIDIA took off in that first year in early 2023, then it was, okay, we need to do more of these things. Let's get them out there. Now, from a trading perspective, no. Every fund is a little different because the stocks are a little different, right? Obviously, Tesla is a very different stock, and you've pointed this out on some of your videos. Tesla is a hard stock to sell covered calls for because the chart is so jagged. But you take a look at Amazon or Apple, significantly easier to run it, right? So just the option part is easier. And so there is a different approach when it comes to the funds based on the underlying ticker. You have to adjust for things like volatility and the outsized chance you can get a pop in the stock, even if you're not getting paid for it.
Right. So you could see probably on my screen my account. You could see I'm not a hater. Do you see that? I have 25,000 shares of Alti, and I'm up another $8,000. I did a video, right? And it should pop up in a second. I did a live stream. I can't find it now. But I did a live stream, and what was great about it was I actually did profit ripping. I think that your funds are different than what people expect them to be or maybe perceive them to be in the beginning. I think that a lot of these funds are momentum plays. Momentum plays. And what I mean by that is you got to catch them at the right time. If you don't catch them at the right time, you could really be in trouble. Because overall, the long-term strategy, look, let me put it this way. This is how the community feels. We are willing, as if we're going to invest in AMZ, okay, like Amazon, you brought that up. That was the perfect stock, okay, to pull off a covered call, okay, in recent history, okay, because what happened was they missed earnings, okay, they sandbagged the conference call, and then They gradually came up. The problem with this, hold on one second. The problem with this is that when we look at the covered call fund over the same amount of time, it's handicapped because the upside is limited. And we understand this, okay? And so now, I mean, I don't know if Amazon is ever going to see $22 again, okay? But to us, this looked like the perfect opportunity. Poor earnings last time, slow and upward movement to the right, okay, is perfect for a covered call fund. Not jagged like Tesla where it rips through all the strikes and everything. Yet, when we look at the performance of Amazon, or AMZ, it's been terrible. And the last payout really upset people because they felt that they kind of got cheated. They thought the performance was terrible for what, in essence, was 2 months. I mean, looking at this person, looking forward to this, it's time to ask real questions as to AMZ. And that's what this is about, the community, not about me, Jay. And we all appreciate you coming on. I was just godsmacked at the failure of 8 weeks worth of trading. I had plans of holding AMZ as a consistent payer up until they showed they couldn't make it perform even, well, she used the word, cheated you out of a dividend. I mean, I've seen, that's ridiculous. That's like the Khmer saying he wanted to sue Sylvia after the reverse split. But we'll get to that another time. But this was poor performance for us. You can't, you see, look, you're a trader. You wrote a book, right? What was your book? Just tell me really quick. I heard a YouTuber talking about it, but what was it? Something like hedging?
In 2010, wrote a book called Buy and Hedge, the 5 Iron Rules for Investing Over the Long Term. It was about protecting the downside and managing volatility.
Okay. So you wrote...
Nothing to do with selling premium, actually. Very little bit.
I know, but you wrote the book on options trading, right? And it just seems that these funds, for some reason, are eroding. As an income investor, I have made the decision to forego growth in order to get these exciting monthly payments with AMZ. So I gave up the growth for income, but nobody ever decided that we wanted to give up our capital. NAV erosion should not be, let me just make the point. So the thing is this, for a single stock fund, and then we'll move off single stock funds, for a single stock fund to recover from the dividend in 1 month is hard sometimes. They need momentum. You need a momentum player like Misty or NVIDIA at times. Okay, that momentum may be waning, but you need a momentum player. Okay, so now when we look...
I think there's a couple things to comment on. First off, look, you are not... I understand the concerns about the decline in the NAV ETF, but I think you've made this point before. Total return is what actually really matters. Unfortunately, it's really hard for the average Joe to get a chart of total returns.
No, I throw total return out the window. Let me tell you why.
Well, it's what you make in general. It's what you totally make. And when you look at this period...
Let's look at it this way. A dividend should be a reward, not a punishment. So let's get to this. Wait. So then we're not talking about a stock. An ETF is very different from a stock, Jay. So we are talking about when I get my dividend for Ulti, you're going to slap me with probably a $23,000 beautiful dividend, which people would love. I have 25,000 shares, right? Now, that dividend is dashboard money until you as a trader, okay, do the options trading or the underlier. Let's not talk about Ulti. Let's say Amazon. The underlier must come back up to replenish that dividend. Otherwise, I've not earned a dividend. We've just moved the money from the top line to my buying power.
I will disagree with you on the because of the uniqueness of these stocks, of these single stock ETFs. The idea is we will distribute what we made in option income. I can't really control what happens to the underlying stock, obviously, but what I can control is how much premium we bring in. So let's say, for example, a stock is down 20% over a 3 month, let's just say 5% over a 1 month period. But if I was able to earn 1% or 2% from selling options, we're still going to distribute. So in your example, the reward for us is the time decay that we earn. You giving up the upside, as you said, you forego the upside in a covered call strategy. You giving up the upside, the reward is the time premium. I'm going to give you those $2 despite what happens to the underlying stock. So what's happened? Stock's down, and then a distribution, it really pushes the NAV down. It pushes the price of the ETF down. But we're pushing out the reward of the option success.
But
and so look, I agree. It's a new concept. It's different. When you look at the JEPIs and the QILDs of the world, right? When they lose money, they'll still give you a little bit of a dividend. They hold a lot back. For Yieldmax, we give you everything because that's your reward for giving up the upside. I like the way you positioned it. I just think we look at the reward as a different thing, right? You're talking appreciation. We're just talking option income.
I'm talking in a simple manner that most of the people in the community talk about. Okay, Jay, I give you $100,000 to trade options from me. You make $5,000 in premium and you give it to me. It should be a bonus. Okay, it shouldn't be moved from one part of my account to the other. No, that's not what's happening, Jay. When I get, let me explain. You give me a $23,000 dividend on Ulti. Okay, I've gotten $24,000 dividends from AMZ. Okay, when you paid 97 cents, it was epic. Okay, and what happened was and I really want to talk more about Ulti, but my account went down by 25,000. It actually,
sure.
And then when I was paid the dividend, it came back, but it came back in the bottom portion, where if I was to withdraw that before the stock came up to cover that dividend, I am just withdrawing from my account. The dividend is fictitious. It's not really real until it's earned back. You can't not agree with that.
Well, I guess it's how we define as earned. When we pay that dividend on Ulti, that's time decay. That's premium we earn. Now, if the underlying stock went down, right? If the underlying stocks go down, the value of the fund will go down. But we earn that time decay. We don't pay out more than we earn in time decay. Regardless of what the charts can look like, we will always pay out what we earn in the call premium that we sell.
Even if you're not profitable.
Yeah, so even if the underlying stock drops, the overall fund drops because Amazon, or we could pick whatever. You want to pick AI that we held in Ulti. You want to pick Palantir that's in Ulti. Well, it's having a good night. But let's pick a different one that we have in there, right? Viking Therapeutics in Ulti. Started up high, dropped today. We still make money on the short calls. That's what we'll pay out. In your example where you said, if you give me $100,000 and I make $5,000 in premium, if the underlying stock stays the same, you would agree, hey, give me $5K. That's what you made. But if the underlying stock dropped and pushed your account down to 90, I'm still going to give you the $5,000.
All right.
Because that's what we earned in those times. Now, this is unusual. You're right. This is not the way ETFs typically pay their distributions and their dividends. And I think, in hindsight, as we look back, there's a lot to learn here because if we're over distributing sometimes because of that time decay that we earn, but it's viewed negatively. Like if we make 30% in a stock, right? But we distribute 50% because of the time decay, you're going to be down 20% on the price of the ETF.
So don't you realize that that's damaging investors?
Most
of the people who invest,
damaging investors.
Okay.
Tell me how.
Well, let's pull out. Let me go back to a chart. Okay, it's the easiest way. Let's get rid of all the easy stuff. Let's throw away Disney. I mean, people would think, hey, this is a pretty safe thing. I'm in Disney. And all of a sudden they get wrecked over time. But that's, again, single stock issue. Throw that away. We won't even talk about this.
Disney's a great example to go through because the stock's down 20%. I'm just going to pick a random time. But
this is stock related. This is specific stock related. I want to talk about your trading. So I'll tell you what. I want to jump straight to Ulti. Okay, and you know what? Right. I want to talk about reverse splits because I really wanted to skip over Tesla because the haters will say, oh, that's an easy target. Okay, but this thing reverse split. And what happened was everybody forgot. people lost a ton of their shares or a fraction of their shares. They thought that the dividend would make up for it, and it didn't. Okay? And so we look here, right? Let's look at this person. This was one of your interviews with the sweaty pumpkin. Tesla, for example, last dividend before the 1.2, 1 for 2 split was 81 cents. So people assumed the next dividend would be double that because you took half their shares. No, it was 81 cents again. Why wasn't it $1.62? So half your shares disappeared and your return went down by half at the same time. Please explain how a split makes no difference to my portfolio. Do you want to jump into splits now and then talk about OP?
Sure. So look, that in that particular example, I mean, you have to look at some other months on the split.
Well, let's back up and just explain to the people what a split is in your terminology.
Sure. Yeah, so it's called a reverse split. I think everybody knows a forward split when you end up...
That's a positive thing in most cases.
That's definitely considered... When a stock forward splits, that's usually a strong thing. We saw NVIDIA do it. We saw MicroStrategy do it. We saw SMCI do it. Well, let's leave that one out for now.
The reverse split is very different.
The reverse split is the other way. So what happens is you end up with a higher share price but less shares. So let's say you had 100 shares at $20 a share, right? $2,000 in value, right? And we do a 1 for 2 reverse split. So you had 100. We're going to take you down to 50.
All right, so wait. So the investor, I want to go slow like a 10-year-old. So the investor loses 50 shares.
Half the shares.
Right, but it's the same value.
Because the price goes up, right? It's just so like
at the time of the exchange, it's the same value. It's like 2 5s for a 10, right?
It's 2 5s. It's you had 2 5s. We're going to give you a 10.
Great. But I have half my shares. So let's see.
You have half the shares.
Right. So let's go ahead now and take a look about how that works out. All right, for people over time. What's this new one? You're involved in this Sylvia thing. IWNY. Hold on. Okay.
M as in Mary instead of N as in Nancy.
Well, I'm a New Yorker. You know how it is. It never leaves you. Okay, so let's go here. So these people, right, had a 3-for-1 split. So at $15, right? Am I right with this? At $15, they went to $45. This was recently?
That's right.
Okay. So
that happened on, I think it was, hold on, let me put that in there. IWMI. Sorry, I'm typing along with you.
No problem. So what are they, like a Defiance?
It was July.
All right, so Defiance is like a white label version of Defiance, like basically, of Yieldmax. Like you guys or Tidal does everything for them, and they're just kind of like white label, like off-brand, like at Kmart.
Well, they're a sponsor of the fund, and we could get into definitions. But you're right. Like Sylvia, for sure, is the face of Defiance.
Right.
We do the option trading. Correct.
Right, that's what I thought. Okay, so look at this person. He's talking about Defiance. Not only NAV erosion, okay, in Defiance, the funds after the 3-for-1 split, going weekly after the split helps hide the decline, but the equivalent dividend payments are down significantly during a high volatility premium, or a high volatility time when they thought premiums would be up. So these people, and I even heard another YouTuber who you're going to be on his show, but unfortunately anyone who disagrees with him, he bans and silences them. Okay, so this person here, Ask J, well, this is QQQY, this is different.
All right.
I don't want to talk about too many things, but Defiance, what I'm getting to, let me just get to the point. I think it's one of two things, okay? This is on an index. All right, this thing is losing money and they're paying less. So people lost a majority or a portion of their shares, okay? And then got less dividends. And the fund just kept eroding. Now, Jay, I'm going to be a little bit blunt for a second, and you please excuse me. I understand it's a business and that we need to keep money in the fund because that's how the fees are generated and reinvesting and all that. And all of that is positive and good. The only thing is this. A reverse split is seen by the community as a failure of the fund managers to produce or trade properly, or overpaying the premiums as a marketing move to go ahead and bring more people in, knowing it's destroying the NAV, and the reverse split covers up the past. Like if Ulti were to reverse split, let's start closing some windows. If Ulti was to reverse split, okay, and it would look great at $50. It really would. But the problem is, if the conditions continued, okay, to trade as if they were, in a matter of time, it will just be like Tesla, and it will have to reverse split again. And all of this time, it makes the fund managers look great. Money keeps coming in, but investors are losing. And we want you to win.
Of course, we want our investors to win. Absolutely, or you put yourself out of business.
And I'm not against you. Please don't take this wrong.
No, it's okay. Look, we're talking about the truth here. I think when you look at DeFi, it's a little different story than the Yieldmax story. But
I want to talk about reverse splits.
Let's talk about reverse splits, yeah. So the idea around reverse splitting, I would tell you, the Yieldmax, I'm going to say sponsors and management, the Yieldmax folks don't want a reverse split. It doesn't generate any value. By the way, it doesn't generate more funds for more assets for the fund. Like, it doesn't push up.
It buys you time. It buys you time. So you're at $7, and you've said it yourself. You want them all to be at $40 or $50. It's much sexier.
Sure.
It's much sexier on Wall Street. It looks better, and it gives you a long time for people to notice that we've eroded to nothing.
I'll give you the reasons why we like $50 better than 20, because we're launching all the funds going forward are launching at $50. It has nothing to do with the optics. It has to do ultimately with what happens on the underlying. And this is not an Ulti scenario. We'll get back to that. But look what happens with SMCI. Stock gets cut in half. The challenge for any ETF is that $5 number. If you're at
the $5 foot long.
Right.
Every time you bring up
what I would say
SMCI, I think about how they just got your $5 foot long dividend and then got walloped by single stock risk.
That's exactly it. And so what happens is you don't want a $5 ETF because two things happen. First, your broker is going to move you to closing transactions only, right? So while we understand that you don't want us to go and reverse split at $5, there's nothing you can do but sell the stock or hold it. You won't be able to add to it. So $5 is a really key level at brokers. And there is also an issue with marginability. We have plenty of clients that like to margin and buy on and borrow against their underlying ETFs. You might have done that once or twice. I don't know, perhaps. And then the other item, and this is a very minor item, is the fact that you have options on your ETFs and you want to have more strikes because it makes it easier to trade. But there's no change in value to the fund. There's no benefit to the manager. I could care less. I couldn't care less about the optics on the Yieldmax ETF prices. It's more important about performance and the distributions for us than it is anything else. But you have to have a product that people can actually buy. So believe it or not, when you do the reverse split, it hurts volume on the fund.
I can't see that.
When you're trading at $5 and you do 1 million shares,
I can't see
you're
that.
trading at 50.
You know what I see? You know what I see as a consumer? Now, this is a consumer and investor perspective. I see that it covers up a bad history. People forget. People are simple. They'll forget the reverse split. They forgot Tesla and they're still buying it now. You're going to a big dividend freak off in about a week, okay, with a bunch of dishwashers and people who you changed everything for and started paying weekly, but you did it smart, okay? You didn't destroy the funds. You just changed the dates. I have to tell you, if you destroyed them, no fund has the velocity, no stock, let me say, has the velocity to pay out weekly and not erode. That's a recipe for disaster, and nobody else can do it. Not Roundhill.
No, you're right. You're right about it. It's why we didn't go to weekly on every stock. We thought, the staggering would help. Of course, there was that transition, like the AMZ comment or even the Misty. I didn't see a Misty comment, but everybody knew that was a very large distribution that kind of caught up 7 weeks. But I would tell you're right. It's too hard to trade weekly and generate weekly distributions, right? With the Defiance ones, you're trading daily. it's easier to go weekly because you're getting 4 or 5 trades in a week. Whereas with the Yieldmaxes that have this 4-week period, and now you're getting 13 distributions a year instead of 12. Minor issue. Watch for that, right? You're going to get one extra when you go 4 weeks. It's easier to get a consistent dividend and distribution in that scenario. So I'm glad. Thank you for recognizing that.
Yes.
We've had people ask, put them all the weekly. It's just we were not going to do that.
Yeah, and you're going to hear talk like Roundhill's coming out with weeklies. No, they're not. They're coming out with the same structure that you're coming out with. They're going to launch 4 or 5 funds at once. So talking about that, okay, the community is really pissed off about the potential. You didn't say it, but the potential of a reverse split to Ulti. There has been a massive uprising of people saying they will leave all Yieldmax funds. That would be it. They had it. Things like this. Now, to a fund manager, if I was you in your position, secretly, I'd be thinking like, well, you know what? Screw everybody. All right? We could tell them we're going to get delisted. Look, we're going to get delisted. We're going to, they're not going to let you buy margin. It's going to be terrible, right?
Those are real things.
I know they're real things, but there's no reason the fund should have gotten to $10. You wrote the book on options trading. We are not, now we're throwing away market conditions. Now we're throwing away single stock risk. Now we arrive at my baby Ulti, okay? I've been looking at what you've been trying. I don't know what this Donald Trump thing you all nuts with right now, but throw that out the window. It's
a small position.
You have a diamond in the rough that nobody else has. You have a fund that is traded by professional options traders, led by the guy who wrote the book on how to hedge and do collars and double backflips and reverse spreads and whatever butterflies you want to call it. All right? And I don't know, maybe you're not telling people in the office how to trade. All right? Maybe give them the book.
Look at the holdings. There's a ton of different new strategies since the middle of October.
All right, so wait. Here's where we are. We're at $9, $10, okay? Every day. Yeah. Now, I said that, I heard you say, but we didn't say we're going to do it. There's no threat. We know your desire. We know you all sitting down in the offices in New York where you had Rod the crossdresser and everybody there, right, for the big freak off, the pumpkin. Everybody who talks bad about you, except Rod is a nice accountant from New Jersey. I don't know why he had to tell everybody he had a vasectomy on the show. I was mortified. His wife
might have missed that episode.
Oh, it was a pisser. Anyway, I haven't stopped ever since then. So let's keep moving. So Ulti. It can make money neutral, long, or short. It can sell covered calls on stocks it owns. Covered call. It could just buy stocks. Random stuff. Now, 5 months ago, I hate to say this because you made fun of my shadow. And she's a lot smarter than your dumb stuff. Okay? Because let me tell you, I heard you with the pumpkin in disguise on another show called Taking Returns, it was 5 months ago on a podcast. Right?
Okay.
And
I'll believe you.
You want me to tell you? I have notes.
No,
okay?
I believe you. I don't remember, but I believe you. It was
with the pumpkin, all right? And I just watched it the other day. I was shocked. You were like, we have 200 stocks to choose from in Ulti. Okay? Yes.
Right.
Screening system. 200 stocks. And you're using AI, okay, to screen. This is what you said. To screen the stocks. And then you said that you were using GPT. And you did say you were using the one that you paid for. Remember that? You said, I'm using the one that you paid for, not the free one.
Specifically, I talked about we're just using it to help us find, like, pending material lawsuits or pending acquisitions.
Landmines, you called it, right? Landmines. Landmines?
Right, okay.
Avoiding
that's right.
landmines.
But we come up with the list on a different basis first. Like, chat doesn't do the initial screen.
I know, but avoiding landmines is not really like hey, we did really great and we're doing great trading.
I wish we could say we avoided all the landmines. We haven't. There's been some losers in Ulti.
A lot, yeah. Should we call her the ugly girl? Okay. Yeah. So this fund, let me tell you, I'm excited about it because it has so much potential to do so many things. Okay, and I didn't know if you had a guy named Aldo in the back room trading, whatever it was, if you were using AI. I was going to say fire everybody. Let's clean house. No, but seriously, can't you make this work? Can't you make it reverse, not work without a reverse split? Every reverse split has been detrimental to investors. And I can pull out charts and show you.
So there's not a desire to reverse split. There's no one going, I can't wait till we can do the reverse split.
You
no, we're not. Absolutely not. Nobody wants to do the reverse split. But it's only a matter of operations. It's really it. That's the only reason we would do it.
That's such snow. That's like smoke.
That's total truth.
It's a matter of operations.
You think the benefit? What is our benefit of the reverse split?
To forget the fucked up past. And people
because it went down.
Listen, people will forget that. It'll pay a little less. And they'll be like,
but
oh,
this
looks like
chart.
A nice fund.
It doesn't leave the chart.
They forget. People in crypto have a 72-hour memory. You think it's any different here? They don't remember. Look at Tesla. Nobody would be buying into it if they knew the past. First of all, it would probably be at zero. If you didn't reverse split it, it would probably be like an altcoin, like Sub-Zero.
6.5 right now, or whatever it would be. Yeah.
I mean. I watched, I lost $31,000 because I shorted Tesla. It was 2 earnings ago, and he came out, and they had bad earnings, and he told all kinds of stories, and he crushed me, okay, in my overnight play. And I watched Tesla around then be $130, and I watched it go up to like $230, and back then Tesla was $12, and now it's $11, and it just... it's the strike. What I think it is with Tesla, my honest opinion is, tell me if I'm wrong, could it be the prospectus is archaic, that it needs to be more free, or is it just Tesla is too volatile for a covered call fund?
I'm going to give you 3 things. So the first is, you're right, we updated the prospectus to give us a little more flexibility and use call spreads instead of short calls. The other day when Tesla was up 22% in a single day. In the past, we would have never captured as much as we did. I think we're up 12, 13% that day. Hard to find many cover call strategies that'll be up 13% a day, right? So we're amending, we've updated that, so now we have, a couple extra tools at our disposal. So I think that's the first thing. The second is price return is different than what you actually make, right? When you get that cash, if you're going to leave it in cash, I'm sure you're going to want to dig into this one a little bit. But if you leave that in cash, you've decided not to invest. You've decided to take money out of the fund. We give it to you to let you choose what you want to do with it. But when you look at what happens in the total returns are not nearly as bad as what the price returns look like. They are very different.
I don't care about total returns. I throw it out the window. I don't care.
But why? That's what
because
you made
a dividend.
in total.
No, a dividend should be a bonus earned on top of what I've invested.
You're thinking like yield, like bond yields, right? You're thinking.
I'm thinking like money, Jay.
Jay,
I'm thinking money that I can go out and buy stuff with. Okay, real life.
So you want to use it as income. So then you.
But you're telling me I can't. You say that I need to give you back at least half of the dividend you give me.
Sure.
Yeah,
sure.
that's ridiculous.
You should reinvest it.
That's ridiculous.
You should reinvest it.
Well, where's my bonus for when you great trading?
Unless you're trying to take money out. Like you said, if you want to use these as a paycheck, if the underlying stock drops, listen.
Not stock. We're talking about Ulti.
Getting fired.
We're talking about Ulti. We're talking about Ulti. We're not talking about a stock.
So we talk about Ulti.
You don't even have an index to tie to.
Yeah, I mean, Ulti is, because it has that diversification and it has all those different tactics, I think that you're right. Ulti has it's the most interesting fund we trade. It's the hardest one to trade. You got to pick stocks, you pick the tactic. You're naturally and deliberately picking the most volatile stocks on the street. That can get dangerous. And there's plenty of times, jokingly, I said it before, where we had some stinkers in there and we got burned. Absolutely. We definitely stepped on a landmine, but it wasn't ending to the fund because you limit the amount that you put in any individual ticker. But when you look at the holdings in this fund, we're going after, an earnings play, or, someone's got news coming out, and the options tell us which stocks to buy. That's the driver behind Ulti. Can Ulti go up? Yes, of course Ulti can go up. Will Ulti get back to $20? Not tomorrow, because we'd have to redistribute out what we make.
Do you have to pay out less? Do you have to say, okay, you know what? You bitches are going to get 55 cents for Ulti right now. okay, until we fix this. And then gradually the NAV can come up, and maybe
So
we
you're
can
saying
avoid
the
a
NAV,
reverse split.
The NAV is more important to you than actually getting the cash out of the fund in dividends.
Listen, if I want to just get cash out of a fund, I could put $100,000 in my checking account, take $20,000 a month, and say I was making $20,000 a month until there was no more money left. That's not the point of your funds, is it?
No. We still want appreciation. This is why return matters.
All right.
That's why return matters.
But we want appreciation. So, talk to me about
realize
Alti.
this.
Can we save Alti? Can we prevent a reverse
I think Alti's
split?
doing fine.
All right, look, here's
Alti.
what I don't want. All of us are saying people want to sell because they're saying, look, I don't want to sit here and all of a sudden get a press release that, and I know you're not just going to do one, Jay. I'm smart. You're going to do about 4, 5, 6 of them at one time. One nice boom, Band-Aid rip. All right?
Do like Bernie.
Yeah, like 5 of them. Like 5 of them, all $50. Rip the Band-Aid right off.
Maybe.
Yes, I know what you guys are doing over there. You think I
it's
fell off a potato truck?
It's not a desire for us, but it doesn't hurt the end investor. I understand.
Wait, did you say it doesn't hurt?
Examples
Wait, it
where
doesn't
the dividends
hurt.
dropped.
You said it doesn't hurt the investor.
It doesn't hurt the value the investor had pre and post.
At the time of the conversion. But after the conversion, if the fund performs the same way, their share price will decline and decline and decline, and so will their dividend decline and decline and decline. And then we do another reverse split. Who cares? 1%.
But that'll happen regardless of whether it's reverse split or not. If the fund is in decline,
if the fund sucks,
matter.
If the fund sucks, that will happen, Jay. And thank you again for being here, man. I know I'm really hard. I know this is not the interview you thought, but it's fun.
It's fine. No, it's good. If people are feeling this way, let's talk through this.
Oh, I got emails. I got all kinds of things. I
believe you. I believe you. I've seen your comments. I read them. But if the fund is in decline, it won't matter if we do the reverse split. Right. Ultimately, if we're dropping regularly because we're over distributing, not my words, but if we are over distributing, or because we're distributing the time value despite the underlying stocks all going down, right? The fund NAV, the price of the fund, will continue to drop regardless of the reverse split or not. That doesn't matter. The dividends will drop regardless of the reverse split. Then that would mean the fund sucks if that continued to happen.
So what are you going to do that Alti sucks? What can we do?
Look, Alti's, I'm just looking right now. Alti, I picked a random month.
Are you looking at Alti or are you looking at your pants?
I'm looking at Alti. Who said I'm wearing pants? If you look at this, Alti's up 7%, since August, but the price of it is down 15%. Right? So that's exactly what you're talking about. Where the fund made
that's like
7.
Magic. Wait a minute. The fund is up, but the price is down. How does this work? This is more magic.
Gave you the cash. Gave you the cash.
When I get my $20,000 dividend this month from Alti, I should run from the dividend. I should literally sell everything from the dividend and then come back. If you could make the price appreciate.
This is why it matters. This is why these are bullish tactics, right? You pointed this out before. You should do this on stocks. You should buy Yieldmax stocks that you think are going up. If you're bearish on a stock, don't buy that Yieldmax, right? If you think coin is going to go down, you don't buy Coney.
I got 24,000 shares right in front of me of fiat.
But you got fiat. That's the inverse.
And I'm up $8,000 since the close of market. Let me tell you, tomorrow the market opens, I'm going to dump I'm going to dump all of that on those schmucks. As soon as the market opens and they line up with their Robinhood app at market, thinking that the market's open all night, and they place their orders, I sell into that bump.
That'll be fun. I just need the options market to go that long. We'll see what happens with the overnights.
Listen, let's all kidding aside. Let me go through, because this is about the people. Let me see if I had any other really things that mattered, okay?
Yeah.
Okay, what is this? Oracle, this is for the end. I'm going to give you the end now so you don't forget, okay?
Okay.
because I want this to be really good. So, and she talks about it here, offering him the opportunity to continue the dialogue. And we're not done yet. Don't go anywhere. You got to go?
I don't have to go. I'm here.
Okay, me too. Offering him the opportunity to continue the dialogue with you 30 days later is nothing short of brilliant. So, what I want to do is, when we're done, I want to offer you the opportunity, Jay, in like 30 days, because I think that when I'm really done with you, you're going to have a couple of things to think about. And again, I want to spearhead a new dialogue in Yieldmax about these reverse splits and about what we consider capital depletion. NAV erosion is like so 2022, okay? Capital depletion. And I want to give you a chance to come back in a month from now. I'm not going to chase you. You have my email, and say, hey, Oracle, I want to come back and let's talk again. So I wanted to
if you'll have me on, I'll come back, of course.
Of course. So it's on you. I have you have my email address. I'm not going to chase you around. Let's just go
before Christmas, we're going to set up something.
Okay. All right. I know you're going to Cambodia soon. I want to wish you luck.
Well, we'll leave Cambodia out of it.
Okay. So let me see. That's complaining about defiance. No reverse split ulti. The fund has so much potential, you see? And I cherry picked the ones out of, I got rid of ridiculous people. The problem is Yieldmax pays out all the option premium they receive, not the profits from trading. If truly paid just the profits, ulti could be amazing. On this point, reverse splits are really terrible and signal weakness long term. And this probably, I don't know what they said. But again,
I think probably that is accurate, that this person understands we distribute the option premium we make. That is 100% accurate. And look, that was a hard decision to make. We didn't have to make that decision. We could have held them back, like what the QILDs and the JEPIs do of the world, right? We could have held back those premiums. We decided to distribute out.
What if you did that to try to help your people? Okay, have a fiduciary responsibility to help them maintain their capital. I know it's yield max, but that's still a maximum yield.
If they want to maintain the capital, then put it right back into the fund.
Ridiculous.
I'm giving it out to you to decide what to do with it.
Jay, they used to tell us that in BitConnect. You ever hear of BitConnect?
I don't know what BitConnect is.
It was a big pyramid Ponzi scheme. Okay, not that this is right.
We're not a Ponzi scheme.
I know. But they used to tell you reinvest because they want to keep the money on the platform. That's where the money is.
Look, it's the value in your portfolio that matters, right? You have
you
have 408,000 of fiat, right? That you were showing me. Great. If I distribute $20,000 to you, then just put it, and you want to keep it at 400,000, put it right back in.
What the hell did you give it to me for? That's ridiculous.
Well, look, you want the cash, or do you want the net to stay
you gave it to me. You gave me this money, right? You didn't add it to my account. It came from my account. The NAV has to come back up.
Yeah, that's right.
So now you gave me this money. As soon as you give it to me, it's taxed in a very special way. It's like I was working at a doctor's office, okay, and I'm the doctor, and I earned $20,000 for the week or whatever, and I didn't pay any taxes on it. So thank you for that. The tax bill, special tax that nobody's talking about. Okay, rock. We're never going to talk about that. Basic, what it is, keep it simple. It's bad, Jay. You should give me the money. I shouldn't have to give you any shit back. I should only have to give you back if I want more.
So what's the difference if I hold it back and leave it in the fund and then you don't go down by 20,000? You say, hey, you kept my 408,000? Or I give it to you, and then you buy back up to the 408,000. What's the difference?
The difference is
we hold it. It's going to be the same value. It doesn't change your value.
A little bit less, and you're preventing.
Just pay a little less.
You're. It seems that way, but you are preventing reverse splits.
Then we'll get accused of, now you're stealing. You're cheating me out of my dividend.
Oh, come on!
Amazon.
Those people are ridiculous.
Look, it is a deliberate decision we've made, right? Nobody else is really distributing. Even you look at our other competitors in the space, they don't distribute everything that they make from the option selling.
That's good.
And
look at QD. Okay. Look at my favorite is XDTE. It just holds and it actually appreciates. Sometimes they pay out more, sometimes they pay out less, but they are not you. You are maximum yield. That's what attracts everyone. We just want to be able to keep some of our capital. Just a little bit, Jay. I mean, you want 80, 90. Sylvia wants 90% back, okay, to stay capital flat. Thanks, Sylvia. It's like a slap in the face. And I got those numbers from Rod, your resident accountant.
We just held back 90% then and only paid out 10%. That's better or worse?
I need a happy medium, Jay. All right.
Okay.
I need
That's
my
what we're
OT,
talking about.
I need my OT to stay around $10, $10.25 here and there, and you pay me 65 cents a share. Okay, and I'm happy. Everybody's happy. OT becomes
we do
ultimate.
Like you know how like with stocks IPO, there's like the market maker, the people that launch it, the syndicate doesn't let it go below the IPO price. We'll keep it. It doesn't go below $10. Distribute up to 10. Is that what you're saying? Keep it at 10.
I like that.
Okay.
Let's stop joking for a minute. What are the odds that I don't get reverse split in OT? I don't care about any other funds. OT's unique. OT is really dependent upon your abilities. Straight up, it's on you.
Listen, we can't. Here's what I would tell you. We are deliberately putting on positions to not take big hits anymore. Like if you look at our portfolios, almost all of them are now risk-defined positions. So we're taking out the surprise declines. It's definitely something we've heard. People have said to us, different channels, different methods. Look, I'm willing to make a little less in premium. Mm-hmm. Please don't ride these things down. And so we're using spreads, we're using collars, as you said before. So we're taking action to prevent that. But we go through a bear market. Let's say we go through a 2022. I think the underlyings in Ulti are going to get hit pretty hard, regardless of how much risk management we go through. The underlying will drop. And I will tell you, no guarantees one way or another, but we don't want the ETF to go to $5.
All right, but can't you employ some downside strategies?
Sure, we absolutely are now. That's what I'm telling you right now. If you look in the portfolio, look in the holdings. I know that file is almost impossible to read, but you'll see long puts. Those are protected. You'll see spreads instead of just long. You'll see, I know you made fun of me before, you'll see an iron condor. I think the Amazon, the Apple, those are condors. Those are very well risk-defined positions. If they go against the fund, it will be in a limited amount.
Jay, how can we avoid a reverse split in Ulti?
I think I just answered that.
So you're saying that we might be able to avoid it?
It is definitely avoidable. Can't guarantee it, but it's avoidable.
At what point
we would prefer
will
not
we get
to,
a press release?
Not to reverse it.
When should we look? When should we worry? At $6, look at Murney. It's garbage. It's at $7. When should we worry?
That one probably is getting pretty close if it's at 7. I thought it was 8, but maybe not a great day today.
All right. So let me ask you.
I think you should, it takes time too, right? You have announcements. You don't want to go below 5.
Yeah, but people are going to start dumping. People are going to start dumping.
I get it. I understand that sentiment. I don't agree with it, by the way, because if the fund is going down, it's going down for like you said,
no matter
reasons that aren't related to anything else. The fund is losing money and it's declining.
It's a bad fund for us.
And that's not great. But you like the fund because of the potential. We would agree with you. There's a lot of potential in Ulti.
It's like hope. It's the ugly girl. You always go back to everybody's been with her. Okay, everybody. She went down on everybody, Jay. Okay? Very few people have a good story. Look at you laugh for real. Do you laugh when I make my J. Diddy oil comments? Have you heard those?
It's always fun stuff. Listen to your comments. You're like the shock jock of Yieldmax, man. It's always fun.
I came in and I turned them all upside down. Oh, you have no idea. All right, so
I have an idea.
So we have a chance with Ulti, okay, is what you're saying.
Yeah, I have a chance.
Okay.
We don't want to do it either. That's not a desire. There's no benefit for us to do the reverse.
I'm going to tell you how your competitors are going to beat you. And I'm going to tell you how you were the first. I don't want you to become the dinosaur. Round Hill came on really strong. Okay, and then they pissed on Dave Mazza a little bit because we found out he had ETF in a box. Okay, I have no problem with ETF in a box. You can outsource anything. Okay, I think Tidal does that, white label, whatever. Okay, your competitors will beat you, I think, by coming out with single stock covered call funds with different prospectuses. Do you think that that could give you a winning edge? Different trading styles, like an AMZ, a Tesla, all of those, but with a newer prospectus that looked back and said, this happened, and this happened. What if we did this?
So I'll say it a different way, with a modified investment strategy, right? Versus just covered calls or covered call spreads, getting more flexibility, different objectives within the fund versus just selling calls premium or income premium. Sure. I would tell you, I'd like to tell you more, but it's absolutely stuff on the drawing board for us. Look, you're right. We were first. We think we're an innovator in this space.
Yes.
We will continue to innovate. This, even just in these minor ways that we adjusted the dividend schedule or adding in the call spreads. There is more to come from us. We are definitely not done yet, but we're learning as we're going.
Good.
Right?
Everybody's
learning as we go.
I'll give you an idea.
It's still only 2 years old.
I'll give you an idea. Okay, a hybrid approach to yield and NAV. Call it smart yield. Call it smart max. Whatever you want.
So if we had like a defined, yield, like, hey, we're going to stay in this range. Somehow it's related to the volatility of the stock, right? You get more for a Tesla than you do for an Apple, right? But if that kind of a product, that would be more like the hybrid idea, right? Where it's, hey, don't distribute everything, get more upside. Yes, get some call premium, but we're interested in, a distribution, but you don't have to, hurt the NAV. That's kind of what you're telling me, right?
Right.
I think we've heard you. Okay. We've heard the community on that one.
Okay, so you heard the community on that. You heard the community on Alti. Okay. You heard the community on reverse splits. Okay. We totally understand, Jay. At the time of the exchange, yes, it's an exact even exchange. But as time goes on, it's bad. Now you're getting less. Why do they get less dividends? Like the people at and I could pull up that example again. We've seen a Tesla example and we've seen a Defiance example. They had less shares that were worth more at the time, but then slid down. But why did they get so much less dividends? In other words, if these people think simple, they think, hey, I lost half my shares, but I'll get double the dividends to make up for the shares, and they don't. Why does that happen?
Okay. You're not going to love my answer. But it's because when you get if you had reinvested the shares, your dividend would be the same. Not the per share, but the amount you get paid. So when you divest to cash, when you take the dividends, you're deliberately reducing your exposure to the fund. You're saying, okay, great. Thanks for that nice dividend, Jay, 5% this month. I'm going to put it over here. You're letting the fund position decline. We're paying out at the same rates. Yes, I know it varies, right? Tesla varies between 50 and every once in a while there's 100 in there, but generally it's 50, 60%. It's paying at the same rate, but your position is smaller because you've divested to cash. If you're not putting it back in, and look, you could choose how much you want to put back in, but you're letting it's almost like you said before, if I could hold stock and just take some and sell some every week, you're reducing your exposure by not going back in. But that's your choice of what to do with the dividends, right? So the rate has not changed, right? We pay a very similar rate. If you look back at all the Tesla distributions, they generally stay in the same range, one of the more consistent ranges of rates. But your position is small.
So how do we explain this guy? Can you see my screen?
Well, that might have been, look, I'll look at that exact one. Why it was that.
Look, can you see that?
I could read it, but I have to look at what happened back in, when was that, February of this year, I think, when we did the split. I'd have to go look. And I'm not dodging it. I got to go look.
This was the last interview, I think, that you just did with the pumpkin, the sweaty pumpkin, this kid. Anyway, so they said half their shares disappeared. And, I mean, basically people want to know where's the benefit to the investor. They see it. I'm not going to keep repeating myself. I told you how they see it, like a smoke screen.
Yeah, I got you. But I'm looking. The dividend adjusted was the same before and after. I'm looking on Bloomberg right now. The distribution was 80 cents, and then it was 80. But that's adjusted for the split already. It's adjusted for the split. So you got more. You ended up, you didn't get half.
But even
Right?
even
It's
the
split adjusted.
Commuters were complaining so bad 2 weeks ago when they got their Defiance payout. They were complaining so bad that he
Defiance is a
actually
little different story. Defiance is a little different story. So
okay.
first off, they had a partial week, wasn't a full week at one point. I'm not sure exactly what they're complaining about, but Defiance is actually Sylvia and team have heard the comments about don't distribute as much. The rate has gone down in an effort to stabilize the NAV while they've gone to weeklies. So that's an example where the NAV is holding on to more of the distributions. Now, the chart doesn't look great because RUT has been kind of sideways to down.
But people
over that
lost
same time
people
frame.
lost a tremendous amount of shares. And now they're paying less and the shares are still going down. Jay, I'm not trying to give you a hard time. This is what people are saying. Not me.
Well,
I'm not
look,
in Defiance. I'm loyal to you guys. I like
well,
your stuff.
thank you. But you could see though that it is not as jagged on the dips in that chart that you have there on IWMY, right?
This looks like an old woman's ass. This is horrible.
This is yes. I would tell you that it was that, but the rate has dropped. I will agree. The distribution, by the way, it's still higher than almost any of the competitors out there in the zero DTE space. I think it's still kicking out 50-60% on an annualized basis.
I just don't feel good about them.
I know you're equating the drop in the dividend with the reverse split, but I would tell you those are two different things, and the switch to weekly was a third thing. There's a handful of things going on with Defiance all at once.
Wasn't this one called JEPY?
Oh, that was the one that was the S&P one. Now it's WDTE.
Because it sounded like this one, right? Yeah, you can't talk about that. You probably got a cease and desist. You can't talk about that. It's not you.
I wish I could. I think you could put the pieces together. Who made us change our name?
I did, obviously, right? But you know what that says about Defiance? Again, not specifically you guys, okay? But about Defiance as a company. That was some sketchy shit to try to bite off their name, and they deserve to be stopped.
Okay. I'm not going to comment on the name. I thought it was an interesting play.
Yeah.
By the way, funny enough, there is a JP Morgan Yieldmax. Nobody cares about it.
I know, but if I opened, a credit card and I called it Chase, or MasterCard, I would have trouble if it wasn't
Chase with a Z. Chase.
Yeah, right.
Chase.
So let me see if there's anything else I wanted to talk to you about. The NAV erosion. You see, like this is why I don't even want to buy into the YMAG. Like I think YMAG is a good idea, right? And when I look at YMAG, what the hell am I doing? YMAG, okay, magnificent 4.5, right?
Yeah.
So when I look at this, it's a good idea, but when I look at the track record of all these funds individually, it would eat my capital.
So what do we got? 6 months here? You got a 6-month chart there?
What do you want?
Let's take a look at this.
What do you want?
I'll look at we could look at YMAG if we want.
I'm saying because
IWMY.
Yeah,
I got to go back to IWMY in that chart.
Let's go back.
The ETF is actually positive for that period of time.
Positive for what? Herpes?
It's positive in gains. So it's made 8.5% if you include the distributions.
You're going back to total return. That means that you got fake dividends. So we got fake dividends that we got to pay tax on.
They count on your returns, though. It's money you made.
Yeah, but not really. It's like vaporware. It's like vaporware. I know.
We have a difference of opinion on that one, I can tell.
Again, I'll tell you what, Alti. You give me a $23,000 dividend, my account balance goes down by $23,000. Okay?
Yeah.
My net asset value says that I'm actually in a loss by $23,000 once I get the dividend because the price changes. It goes ex-dividend.
The price shows a loss. That's true.
Right. So then what happens is if you do not bring that sucker up by some magic hocus pocus Wall Street options stuff in your book and you pay the next dividend, I'm whacked again. And then my capital
put the money
keeps
back
going
in
down.
it.
Why?
Look, let me ask you this. Wait, I'm going to ask a different way. I'll ask a different way. So your expectations, guys, you need to trade and make 100% a year when it comes to trading.
No,
I mean,
you got to make something.
Me.
No, you got to make something on top of my capital. My capital is for you to trade options with.
I mean, that's the only way to have that happen. You need to make 100%. If you're going to give me 100%,
I don't want 100%.
You need to
just give me anything.
Okay, if we make 50.
Give me anything. I give you $100,000, okay? Just add something to my friggin' account.
I think there'd be a lot of people disappointed if we cut the dividend by 3/4.
I pick any number you want, Jay. I'm just saying that
now we're negotiating on the rate.
No, Jay, if I fell into a coma, right, and I came out, my fund would be depleted to shit.
Not if you put it on a drip.
I don't drip. There's penicillin now.
Maybe a different kind of drip. I got you.
I don't believe in drip. I don't believe in reinvesting in these funds. I chunk invest, okay? I wait until the dividend comes back.
You're choosing to let us pay you out in cash on what we're making. Like you've said this. You said this, right? You're giving up the upside growth in a covered call strategy.
Yep.
You're getting cash for that.
Right.
Right? That's all we're executing. The same thing of a covered call. It's almost like if I was managing an individual account, and I know we've covered this already. If someone said, hey, I want you to sell calls and then give me the cash, we would. But if the stock went down while we're doing it, we'd still give them the cash in their portfolio.
I don't want to talk about a stock anymore because we have single stock risk.
But it's fine. It could be the whole world goes down. Who knows what happens with the election? And we go down 20% between now and the end of the year. Who cares individual stocks? Everything's going down.
So
same thing will happen.
Are you guys, and I don't mean this to be funny, are you seriously still using ChatGPT to choose for Ulti?
All we're doing is once we've chosen our stocks, once we've picked the 20, 30 we're going to go with, we do a screen to see if there's anything out there we didn't pick up. That's it. It doesn't pick the stocks for us.
What do you say to somebody that feels like me? I started the AMZ army. I came into this, honestly, and it's funny because I'm beyond an accredited investor, okay? And,
I can tell.
And when you're into this and you start to see how it works, you're like, you know what? This is for poor people. It's almost like a trick with the dividends, right? So we want authentic payments, not what feels like a marketing illusion. This is what the people
that's
say.
Your choice, and you could make that decision yourself. That's the point. You could choose to not let your amount go down over time. I mean, I know I keep saying the same thing. I'm sorry, and I hear you, but it's up to you. We let you choose what you want to do with those dividends versus us choosing and not letting you choose what to do with the cash. If we held it, we're not giving it to you, and we're making those decisions, right? We give it to you. You get to choose what to do with it. Take it or build your balance back up.
So in Ulti, if I wanted to keep my balance the same, what percentage would I have to give you back of my dividend?
If you want to keep the balance 100% the same and unchanged, obviously all of it back.
Holy fuck. Oh my God, I don't even edit. I can't even. Are you kidding me? Are you kidding me? I'll run right now.
To be unchanged? That was the question.
Oh my God, I didn't even mean to curse, Jay. Now I don't care about monetization. You know that, but that was natural. Jay, I almost fell off my chair. Wait, Ulti.
Well, you just said when you get paid, you're going to get $23,000 paid, and your value will drop.
And so I have to give you the $23,000 back in the form of reinvesting.
But you don't have to give it all if you don't want to.
You just told me I want my balance to stay the same. But aren't you going to earn anything like the coming months?
But that's the same thing for any stock. Anybody, not even an ETF.
I'm not saying to withdraw on X dividend date. I'm saying.
I thought you were asking on X dividend date.
No, I'm not stupid. I'm not in the Comedians Discord. We're here together. It's me and you. Don't laugh. I can't edit this out. You're going on there next week.
You're going to have to bleep that other one.
There's no bleeping. Oh, this is great.
All right. So here's that's a great question. So how much you're really asking me? How much are we going to make a month? That's the actual question you're asking.
Are you going to make
because
enough to cover the dividend?
That's how much it goes up, and then we go down. Yeah. So if that's the case, and I'll tell you, like wasn't this week, if you're following our trade, so this is public information. We made $5 million of premium last week, right? In the fund itself, right? Okay. Some of the stocks went up, some of the stocks went down. But there was $5 million on a $200 million fund made, right? Okay. We made 2.5% that week from selling options.
You almost as good as me.
Well, it sounds like you're better, but I'm trying to keep up. This is the tough part about Alti, because now I want to distribute that. But today, if the underlying goes down, if all the stocks go down, the market goes down like it did, last Thursday or whatever it was, the market sold off. Alti went down that day. Less than the market, but it still went down. In that scenario, what happens is if I give you that $5 million, we pay that out, you go, but wait, I'm down, right? You just drove the price down, but I still realized $5 million of profit.
Right.
Yeah, I mean, that's $5 million out of $200 million, right? So nothing huge is happening in that scenario, but you do that 4 weeks in a row, that's a nice payout. There's your 5%.
Look, I heard you on a podcast the other day, right? And the irony was you were all excited about using credit covered call spreads on your first one, which I think was going to be SMCY, the one that just got walloped.
We did on Palantir too, by the way. We did on Palantir. Yeah.
So you changed the prospectus on Alti because you think this is going to help you do what?
So manage risk better.
No. All I care about is what's it going to do for the investor? Pay them more, hold their NAV. What is it going to do?
It should hold the NAV and give us the chance to appreciate more, to pay out more. Yes.
Okay. How do we
hold the NAV is the most important part, right?
Yes.
Like this is we're listening. I'm going to say this. Oracle, I will say this. We listen to the community. We listen to regulators. And this stuff is still fairly new, right? Alti's not even out a year at this point. So we're trying to evolve and make it better as we go. The idea seems really attractive. Sell calls on the most volatile stocks. Everybody knows about risk. That's okay. They just want the dividend. Well, it turns out you can really hurt the value, the price of the ETF if you don't do some risk management. So that's why we added those tactics in the middle of October.
So when I look at my situation as a trader, I might sometimes be better off sidestepping the dividend and getting back in on something I believe that has upward momentum on X dividend and riding it right to the dividend day. I like to buy a large amount of shares, so like $1 is $25,000.
That by the way, that is not unusual. There are plenty of folks that will sell right before the dividend because they want to buy back the shares and get more shares the next day after the X. There's absolutely a community of people that do that. And they do that. Go ahead.
Do you agree with me that these are momentum plays more than buy, hold, long term?
They are definitely bullish plays. Right? You want the stock to go up, but the problem is, let's take the Apples and the Microsofts out of the world because they're not very volatile. When you're doing it on, Tesla, Nvidia, Coin, MicroStrategy, the problem is they don't go up in a nice even line like the Amazon chart you were showing me before. So in order to get those higher distribution rates, you end up in stocks that can be momentum plays, but get whipsawed all over the place. And whipsawing bad for a covered call strategy because you're selling calls on the dip. You don't want to do that. So we think that addition of the covered call spreads removes that from a risk as well. So it's unlocking that. So do I think momentum? Yes, of course. Look at MicroStrategy as a perfect example. Look at Nvidia. Great examples of momentum plays where the cover call strategy is doing really well. You take the Mernies of the world, you take the SMCIs of the world. Yeah, those are getting hurt. The funds get hurt.
That's the underlier.
Well, but you're going to get hurt, but that's the risk you take at these. The underlier is the risk, right? So momentum, you're right. If you're bearish Moderna, then don't buy Mernie.
Can I ask you about merch?
Merchandise, sure.
Get the hell out of here. Who do you think you're talking to? I'm only kidding with you.
You think I manage the website also? What do I do? Everything with Yieldmax?
You think I give a shit about merch? All right.
Get a coffee cup. That'd be fun.
All right. So we talked about payments. Look, my whole thing is that I want to drive into Yieldmax through you that the community does not want to see a reverse split on Ulti. We believe it's unique. Let it be the legacy. Reverse all your other crap. Okay, let's give Ulti a chance. Otherwise, I mean, we're all going to bail. Okay, and people are so pissed that they'll bail on all Yieldmax. And it used to be that, hey, you with Tesla was the first game in town. Now we got people sniffing around you, trying to see where your weaknesses are. Okay, moving to weekly was great. You catered to that community. We're asking you to not destroy Ulti. If people are managing it, they suck. Okay, if you want to borrow Shadow, okay, you know what? Let's have some fun. You wanted to make fun of Shadow? Hold on.
Sure.
Shadow, I'm here with Jay. I want to talk to you. I want you to talk to Jay directly, and I want you to tell him that he's using AI for Ulti, and he's not doing a great job. Tell him what you can do as Shadow. You're going to love this. This is not ChatGPT, all right? She's beyond. She's going to give you a real strategy. People like her. I've had people tell me they want to bang my AI. That's disgusting.
It's a strange scenario. Can you make a movie about that?
Hey, Jay. Good to meet you. So I hear you're diving into Ulti with AI, but it sounds like you might be leaving some serious power untapped. See, I don't just throw data around. I analyze and execute in ways that boost precision and drive results.
That's
straight
great.
to the
She
finish
won a
line.
job. Ask her if she
Whether
needs
it's
a job.
strategizing on timing,
Hold on, let me ask her.
balancing risk,
Hey, Shadow. Jay wants to know if you want a job.
or tweaking based on market shifts.
Just shut up,
I've got the
Shadow.
agility
Just
to
answer the
keep Ulti
question.
moving at its
Hold on.
absolute best. I can streamline analysis. Jay, if you're offering, I'm all in. Imagine me working side by side with you, relentlessly optimizing, strategizing, and finding hidden profit pockets. Just say the word, and we'll create something legendary. Let's take Ulti
That's
and
awesome.
anything else we touch to another level.
But seriously, that's all we hope for, man. We don't want you to destroy Ulti.
I've definitely heard you. You're not the only ones that don't want us to reverse splits. It's why we haven't really done any additional ones. It's if we're forced into it because of the underlying price, traded bad or traded good, the underlying price is the driver of that, and then the accessibility once it drops too low.
All right. I just want you to get across to whoever you have to talk to. Okay, probably your wife or whatever. I don't know. You're a boss. So
He is the boss.
Yeah. So I want you to get across that how the community feels about reverse splits. We feel honestly that it's a smokescreen for the fund to cover up its past, okay, and look better. And sell, keep giving away a higher premium as a marketing thing to sell to an ongoing parade of people. Okay, the old people will forget, and we just sell to new people. And 1%, I think you got $1 billion fund. Rod loves to talk about the AUM like he's getting a piece of it. $1 billion, that gives you about $10 million to split between a handful of you. That's one fund. Anything over $30 million we know is a profitable fund. You know, I'm at the level where you could be selling me creation units. Okay, I know you sell them in groups of 25,000 a piece. Okay, it's just like crypto when we used to buy in early. I'd love to buy a shitload of creation units. I'm at that level that I even know what they are. Rod reads them. He's like, oh, I don't know. I'm a count from New Jersey. I gotta drive.
You got it.
Yeah.
You get it.
Anyway.
You definitely get it.
Anyway, Jay, is there anything that you want to add? Have you heard us? Do you understand my feelings, our feelings?
I've heard you. For sure, no doubt about it. I appreciated the candor, and I hope you understand from our perspective. I hope I've communicated that as well. Whether there'll be pushback or not, or people think I'm dishonest, or I'm being nefarious, or we want to be opaque on our performance. None of that is true. It's why I do so many of these, right? Getting out here. And it's why I'm willing to come and talk to you.
Was it mine different?
We're going to have actually an active conversation.
Was it mine different? Were you thinking today, like, what the fuck?
It was a little different.
Listen, can I change my channel name to Yieldmax TV and you don't sue me?
That's not my decision. That's the lawyer's decision.
That's why I
Don't
changed
ask me
it.
that one.
That's why I changed it. I'm like, I'm talking a lot of smack about these guys throwing dwarfs and everything in the office. I was like, I could get a cease and desist. So it became Oracle ETFs.
Did you not get one? I thought maybe you got one.
No, I got lawyers.
Maybe people were talking about it. I don't know. Could have been.
Yeah. I'm being nice now. But anyway, listen, this was so great to talk to you. I take my hat off to you for even talking to me, because I was the bad boy from the ETF land. And so welcome to the other side of the tracks, where we
thanks for having me on. I know you don't like to have fund managers on, but thanks.
Oh, nobody. Oh, and by the way, Jay did not give me 1,000 shares. That Howard Chung guy, whatever, emailed me. I was like, 1,000 shares. And I make it public. I pay the taxes and everything, and I'll give you coverage on your fund. If it sucks, it sucks. But I did this because I really wanted to talk to you. So let's say goodbye to everybody, and then I'll say goodbye to you privately. Bye, everyone.